Do you agree that regulatory shifts over the past couple of years seem to have made India less attractive to foreign portfolio investors? And if you do agree, do you think there is something that we can expect from you in the future in terms of reversing that?
First of all, I think the FPIs have been a very important part of the capital market landscape. If you really look at it, it's about $800 billion of FPI money has been invested, about $700 billion in equity, about $68, $69 in debt. And if you really look at it, in terms of flows, the flows have also gone up last 5 years. Of course, there has been some outflows recently. And I think any kind of crisis, any kind of your volcanomics.
Vucanomics.
So, yeah, when you vucanomics, you have, such a volatility and uncertainty, then obviously, there would be some churning and the FPIs can also leave. Notwithstanding that, I think it will be our effort to really see is that if there are any pain points, we just take care. And we did actually address many of those pain points earlier. And if there are other obstacles in terms of any uncertainties, which we create over and above what the uncertainties are otherwise due to, economic factors and the geopolitical and geoeconomic reasons, we are definitely prepared to discuss with them and address it.
What are the risk factors that any investor, large or small, should factor in today?
Well, so far as the risk is concerned, I think there is a normal market risk. And of course, as you said, that there is a heightened risk on account of, global geopolitical and geoeconomic consideration. Some of it was visible right from COVID. If you see the post-COVID, a lot of realignment started taking place in terms of geo-economic fragmentation. Because supply chains did not work and people had to do, and then you had Ukraine crisis and you had the Middle East crisis as well. So therefore, everyone wants to reshore the supply chains and, work it out their own way. And then, you have now new uncertainties arising from US administration's new stance on tariffs. I think these are the things which keep coming to the, global economy. You will see that, time and again, these things will come. We are not really in a benign environment, global environment. There will be a problem on growth. There will be a problem on global growth and global trade. People are trying to work out what are the, in what way they can mitigate the problems. For example, India has worked out, at least trying to work out a bilateral trade agreement with US, and also trying to have several FTAs with many other countries of the world. So therefore, those things will be there, uncertainties are there. But those risks apart, there are other risks which normally will come as a matter of fact in any investing. And when you balance a portfolio and you have to see, you are not really, you don't have very heavy positions in one particular this thing. You have to balance between the debt and the equity and so on.
Let's turn to retail investors, because your mandate is not just to manage the market, grow it, but also oversight and ensuring that the markets remain stable at all times. The institution has been proactive in protecting retail investors. There have been lots of measures and decisions that have been taken to safeguard them. Yet this seems to have led to a significant decline in trading volumes. That has led to its own consequences of higher competition. How do you see this playing out? Is this something that you as the head of the institution are comfortable with, sir?
Well, first of all, I would like to really say, I think what you are referring to is the derivative market, but I would like to give you a holistic picture, because retail is very much there in cash market in a big way. Look at the kind of retail protection that our system has provided. When you want to enter, you want to have ease of entry when you want to invest. So we have 95% of the time we have Aadhaar-based authentication in KYC. So therefore you can start investing very, very easily in India. It's not only the app, it's also the whole KYC process and so on. Then you say that if you want to have the transactions, then what happens? How are you protected? And due to the efforts of SEBI and other market players, we have been able to ensure a system where there will be no default, risk due to default of the brokers. We have upped the money and the security in a manner. For example, all the money rest will go to the clearing corporation. It will not be with the clearing members. It will be really secured with clearing corporations. And all the securities will be directly credited by the depositories to the accounts of the retailers, for the investors. So therefore, your securities are not going to go anywhere. Your money is not going to go anywhere. You are fully protected. Now, third, if you want to exit, again, there is a big facilitation. Now, coming to your volume, that means, the question you were basically wanting to ask was in relation to derivative market. Now, in derivative market, when the SEBI has done the study, 9 out of 10 retail investors have lost the money on F&O market. Sometimes, in their exuberance, the retail investors seem to think that they are very smart and therefore but actually they're losing money, and this has been proven where you have, last few. So therefore, we need better nuanced thing on that. And in order to do that,
so may I interrupt you, sir?
Yeah.
Is a clampdown the answer, or is, like you yourself said, a more nuanced framework which allows people to take their risk? After all, it's a free country.
We need to have a nuance. We have to have an informed investors. We have to also have some systemic improvements. Now, in terms of systemic improvement, in terms of how you measure, for example, the volumes you mentioned. Now, the volumes you can mention in terms of notional interest. Now, the point is, the notional interest is sometimes misleading because when you're comparing options and futures, they are not necessarily, it's like apples and oranges. In case of options, it is the premiums which are more, important. Now, for example, on the expiry day, you will have hordes and hordes of people. There will be just before 3 minutes, 4 minutes of the expiry day, if the people are really crowding thing, and it will lead to a market instability problem. So therefore, we had this regulation that means we have a weekly expiry.
If you like the video, do like, comment, share and subscribe.